Okay, so we are going to start talking about business organizations. We're on page 82 of the handout materials on this chart. So when we talk about business organizations, we're talking about you're going to start a business or a new type of a business entity of some type. And these are the 7 most common forms of business organizations that we have to choose from. So we have a sole proprietorship, general partnership, limited partnership, which is sometimes known as a silent partnership. We'll get to that later. Limited liability partnership, an S corporation, a C corporation, and limited liability company. So those are the basic organizational formats that we take a look at when we're deciding, we're going to start a business, what is going to work best for us, what is going to accomplish the goals that we want in terms of taxes and liability protection and management and all of those kind of things, the ability to raise money in the public, all of those different issues. So those are the 7 types of business organizations. And then the other thing on this page that I've got going down in this column right here are the factors that you're going to analyze when you're deciding which of these formats you want to use. Liability, taxation, what are the formalities or requirements to legally form the business, what type of paperwork has to be filed and all of that. What sort of financing might be available in terms of public funds, going public on a stock exchange, making offers to the public to bring in money or to get lending. Management, how is management organized? Can the owners engage in management or not? Are you going to have a management team? Is everybody going to get to vote? How are we going to have officers like a president or a chief executive officer? All of those issues. How long will the business last? And then finally, that's life of the entity. Does it go away when somebody dies? Do you have to start all over again? And then finally, the last factor is liquidity. And that essentially is how easy is it to get out of the business when you want to retire or sell out, that kind of thing. It might be very simple, like if it's Microsoft stock, I can go on E-Trade or Robinhood or whatever and hit sell. Simple, right? I'm out of it. As opposed to a sole proprietorship, I'm going to find a buyer who wants to buy my business, and it may be very hard to do. So I have here, if you'll notice, it says list 4 and then list 4. So basically, what I'm referring to, fill in the blank questions. What are 4 of the factors that you analyze when you're deciding which type of business format you want to use for your business? And then list 4, basically list 4 types of business organizations out of those potential 7. So those are the 2 fill-in-the-blank questions that I commonly ask for that come off of this page. List 4 types of business organizations, and what are 4 factors that you look at when you're deciding which one you want to choose. With that said, I actually developed this chart. I was teaching a class, economic development, over in Salem. And so I'm not going to go through all these. I'm really going to focus on these first 2, liability and tax issues. Those are kind of the 2 major ones. And we'll talk a little bit about the formalities of management, but I actually have a different class on formalities where we go through all that, how to start a business, the whole thing. So that's a different class. So we're really going to focus on these first 2 factors, just so you have a general idea of the differences between the type of entities when it comes to liability protection or none, and whether or not they're subject to a double level or corporate level tax, or if they're a pass-through. So first let's talk about liability. All right, so when I talk about liability, let's go to page 81, right before. When I'm talking about liability, What I mean by that is whether or not the business entity will provide any form of a barrier or protection for the owners of the business in the event that something bad happens. That's a basic idea. Will there be some sort of a shield or protection in the event that you're sued because one of your employees injured somebody? Maybe you have a restaurant and the employee didn't cook the food well enough, and so one of your customers got salmonella or E. coli or listeria or other foodborne illness, and so you're going to get sued now as the owner of the restaurant because of the actions of your employee. And the question is, if you don't have sufficient insurance and other assets, are your personal assets at risk? Your house and your car, potentially your retirement, your personal checking account, all your personal stuff. It's not business asset, it's your personal stuff. Now, some organizational formats, like a limited liability company or a corporation, provide a high degree of protection from potential claims arising out of a lawsuit. And others, such as a sole proprietorship or a general partnership, have no protection whatsoever. There's no barrier at all. So that's one of the things we look at on my chart, and we'll go back to that in a moment, is which of the entities provide some or a high degree of protection, and which ones have no protection whatsoever. And I'll just cut to the chase. Sole proprietorship, general partnership have no protection whatsoever. The owners have all personal risk, both their personal property and their business investment. So there's no barrier at all. LLCs and corporations have the highest degree of potential liability protection. And then in the middle we have limited partnerships, which we'll talk about later. So when we talk about limitation of liability, we're talking about potential claims that result from negligence. That is, either you or an employee did something wrong, and as a result somebody got hurt, and you get sued because of an injury or damage to property, or some other type of lawsuit. We're also talking about debts to creditors. So if the business, maybe we have a farm and we went out and bought a brand new John Deere tractor for $400,000 on payments, and we can't make the payments because for whatever reason our business is not doing well, can John Deere go after our personal assets if we don't have sufficient business assets to pay that debt? Or maybe a lease. Maybe you rent property for your office for a 5-year term at $5,000 a month, and after a couple of years you're just not making any money and you can't pay the rent anymore. So the question is, can the landlord or John Deere Credit Corporation or whatever creditor you're talking about, can they go after your personal assets or not? So is there a shield that is created? That's what I'm talking about with liability. And then the issue is taxes, and I just put that up there because that is, in the real world, if you're the proprietor, the principal of the business, if you're the one responsible for doing payroll, for example, you are personally liable for those taxes, withholdings, and all that, whether or not you're a corporation or a sole proprietorship. So you're not going to get around taxes by incorporating necessarily from a liability standpoint. So that's why I put it up there, because I've had people say, well, I'll just start a C corporation and then I won't be liable for all my payroll taxes. You're still, if you're the one in charge, you're going to be liable. It doesn't really work that way. So primarily when we talk about a liability shield, we're referring to negligence and lawsuits and debt to creditors. So if you look at my page here, sole proprietor general partnership, unlimited. Now I have this orange line. This orange line is where we start to see some levels of liability protection. So everything on this side of the orange line, that is sole proprietor general partnership, you have unlimited liability. In other words, there's no protection. On this side, there's some protection with the limited partnership variations. And then over on the corporation and LLC, you have a higher degree of protection. Now, it's not ultimate. It's not an ultimate. There are ways around a corporate liability shield or an LLC, but for the most part, that's going to give you the highest degree of protection. So let me just sort of diagram what I'm talking about, just so you can kind of see where we're going with this. All right. So let's start with a general partnership. So let's say we have a general partnership, we have two owners, each one of them is a 50-50 owner. And this owner here, let's say, has a net worth of, let's say, $2 million of personal assets. So that's their house, their car, their bank account, their savings, their stock, their retirement. Now let's say this owner here is worth $100,000. So they each have a 50% investment in the business. So let's say it's a farm. So let's say in the farm, they have land, they have equipment like tractors, they have inventory, they have just other various, they have money in a bank account, and they have insurance. So we have personal assets up here, and we have business assets down here. So let's just say the business assets altogether are worth $3 million. That's the value of the land, the equipment, the money in the bank, inventory, insurance, whatever assets there are, accounts receivable, all the business assets. So one day, one of our employees is driving the tractor down the highway. You see that right here all the time. And they don't see somebody on a bicycle, and they run them over. They're in the bike lane driving down the road, and they don't see him, and they run him over. That person's injured, or they pass away as a result. So now we get sued. Wrongful death. So let's say there's a lawsuit, $5 million. Okay? So we get sued because of our employees' actions. So they get $5 million, they win. They're going to go after all of the assets of the partnership. So they're going to seize the land and sell it at a sheriff's auction. They're going to garnish our bank account. The insurance will pay out, but we don't have sufficient assets because we've only got $3 million. So that's gone. So that leaves $2 million that's still owed on the lawsuit. So now they're going to come over here and go after each of the partners' personal assets. Not business assets, but personal. So your house, your car, everything you own. They have different net worths, right? But in a general partnership, each partner is 100% liable for all third-party claims. Now you can get contribution back from your other partner. So if they go to this partner and they take that partner's house and everything they own, that $2 million, now they're paid off. But now this partner is totally broke and they didn't even go after that one. So the problem is, with a general partnership, you are fully liable for all debts, creditor claims, lawsuits of the partnership, co-equal with other partners, regardless of your percentages. In addition, there is no barrier between your personal assets and the business assets. So if you're sued and the claim arises out of the partnership, you don't have any protection. If you don't have sufficient business assets to pay those claims, your personal assets are at risk. So that's one problem. The other problem is, what if one of the partners does something wrong themselves? Like this partner, let's say, goes out at lunchtime in the company truck and has a cheeseburger and a pitcher of beer. and it gets back in the company truck and is driving back to the field and runs over someone. Driving under the influence, it's also going to be a vehicular assault, so that they're going to jail. We're getting sued for what our partner did wrong. This partner doesn't have a whole lot of money, that's all gone, but now we end up paying for what our other partner did wrong, because we don't have any compartmentalized liability. So that's what I mean when I say unlimited liability. On my chart here, in a general partnership and a sole proprietorship is one person engaged in a business activity. That is the default. That's why I have the word default written up there. If you're one person and you're engaged in a business activity and you're not organized as one of the other type of entities, then you're automatically a sole proprietor. General partnership is the default for two or more people. So if two or more people are engaged in a business activity, they're working together, they're jointly using assets that they co-own, or any way that they're working together, a general partnership is automatically created by law unless you're organized as one of these other entities. So it's the default for two or more people. Both of them, in terms of liability protection, there's none. Your personal assets are at risk just as much as the business assets. Now again, this could be a huge problem. And you may not even realize you're in fact a general partner. So if, say for example, a family has a beach house down at Lincoln City or whatever. And the parents both pass away, and the beach house goes to their 4 children equally. So each child owns a 1/4 share of the beach house. They're all on the deed, each of them, 25% each. So they rent the beach house out. They use it themselves sometimes too, of course. And then they split the rental income 25% each, and the expenses 25% each on their personal tax returns. So somebody rents the house, let's say, and there's a broken beam on the back porch, and the porch collapses and somebody's injured and they sue. Guess what? All 4 of them are general partners. They're not an LLC or anything else, so they all have personal liability, even though they don't even really have anything to do with it. So this general partnership can be created just as a matter of how you do business, by your conduct. And that's what I mean by a default, unless you're organized as something else. So you have no liability protection whatsoever. Now over here, we start to have some liability protection depending on how we're set up. So back to my example here. So now instead of a general partnership, let's say we're going to be a corporation, S or C Corp, or an LLC. They're all treated the same. Doesn't really matter. So we have owner number 1 and owner number 2, just like before. Each of them is 50% owner. And again, this one's worth $2 million. This one's only worth $100,000 in personal assets. And again, we have a $5 million lawsuit. We have $3 million in business assets, which is going to be seized, which leaves a $2 million liability. But now, when the plaintiff tries to go after the owners, there's going to be a shield right here. A liability shield. Kind of like in Star Trek, you know, shields up Scotty, keeps all the lasers and photon torpedoes. So it's going to bounce off that shield. So their personal assets are protected by this shield, for the most part. Now, there are ways that that shield will not apply. One way is if you're commingling assets, corporate and personal, so there's not really a differentiation between the two. In that case, a judge can decide that the corporation really is a sham or a fraudulent corporation, and therefore there's no shield. Or if you are the one that personally caused the injury, like if I was driving the tractor and I ran over the kid, I'm still going to be personally liable because I caused that injury. Even if it's in the corporate realm, my corporation will be liable and so will I. Another way that that shield may not exist is if you sign a contract as the owner and you guarantee a debt. And that's really common in small business. If I go out and get like an SBA loan, Small Business Administration, to start a business, I'm going to be a corporation or an LLC. The bank will still require me to sign what's called a personal guarantee. That is, if the business can't pay the debt, I agree to pay it out of my personal assets. That's super common in business. So I just want you to understand that the shield is there, but it's not an absolute 100% shield. Okay? Now, I'm not going to go into all those nuances in this class. So there's a shield there, and then there's also a shield this way. So it provides a compartmentalization so that if one of your other owners does something wrong, you are not necessarily going to lose your personal assets due to what they did wrong. Your business assets will always be at risk. Corporation, general partnership, doesn't matter. The assets that are owned by the business will always be at risk. What we're talking about is a liability shield for your personal assets. Now, why do we do this? Well, one of the reasons why, from a policy standpoint, is to encourage investment. You know, if I want to invest money into a business venture, I don't want to risk losing my house. You know, I'm willing to risk 100 grand that I put into a business, or $1 million or whatever. It's just like buying stock. If I buy stock in a company and it goes to nothing, yeah, I lose the money that I bought that stock, but that's my only risk. I'm not going to lose my house or anything. So that's the policy behind that, is to, you know, help promote investment and that kind of thing. All right, so back to my chart here before we run out of time. When I talk about liability, here's the liability barrier shield. General partnership, sole proprietorship, there's no liability protection whatsoever. Your personal assets, your house and everything are at risk along with the business assets. On the other side of the liability barrier, we have partial liability protection here, and then full liability protection for corporations and LLCs. And that's why LLCs are becoming probably the most common form for small business nowadays. We'll get into it a little bit more in a different class, but that's what I'm referring to when I talk about liability. Now, at the end of the day, insurance is still your #1 defense. Even if you're a corporation or an LLC, insurance is still your first layer. And the reason why I say that is I've had clients say to me, well, I'm going to start a business and I'll just be a corporation. That way if I get sued, I'll just shut it down. Well, the problem is that liability barrier doesn't come in until you have been sued. You got to hire a lawyer. You got to go through all the expense. Insurance is the first line. So insurance will both hire a lawyer for you and pay the claim. So even if you're a corporation or an LLC, insurance is still going to be your best protection. Well, #1, don't have problems, right? Don't run over anybody, but you know, things happen in the real world. So this is not an absolute barrier. That's the point I'm making. All right, that's about it for that topic. I don't want to start another topic, so that will be the end of this video.